watching Captains of Industry here on CNBC Africa. I'm chatting to Herman Bosman, who is the CEO of RMH and RMI. Good to chat to you. Let's get a little bit of depth around your career to this point. You are well known as one of the brightest financial minds in the South African financial services space and obviously in the investment arena. Your career started with Rand Merchant Bank. Can you take me back?
Yeah, 95. I was on the class-off program, which sounds like an eternity ago. In any case, I was there for 12 years, mostly in corporate finance, M&A. And then in 2006, I had an approach from Anshu Jain from Deutsche, who said that they had some leadership changes at Deutsche South Africa and whether I wanted to come and head up the business for them.
So you spent 7 years then after your Rand Merchant Bank time at Deutsche Bank as CEO of South Africa division. How was that time?
When I started, obviously it was the height of investment banks globally. Liquidity ruled the world at that time, and having a global presence with all the transactions that were happening was fantastic.
So you were in the glory industry, so to speak.
Glory days, and then obviously all came to relatively abrupt halt in 2008 with the global financial crisis. And thereafter, the focus was very much on cost cutting. The regulatory overlay started coming in, compliance, and it started getting a lot more difficult to actually operate as an investment bank, especially an international one. What made it interesting from a Deutsche perspective is the business here remained profitable, but was still small and competed with 4 or 5 banks who did not have a financial crisis for all intents and purposes. So the relative competitive position changed quite a bit. And we also had the sense that Deutsche for the next while would actually contract a bit in terms of focusing on getting the house in order before growing again. But it was fascinating to see a global network of people, of specialists. You could really bring the best in. It's not far to fly to South Africa, and it's the wine and the steak are nice. So we had the best of the world here to actually service our clients. But it was tough, and I was very, very happy to think about a change again. The change was not with RMI or RMH in mind. I had kept up to date and in contact with GT and Laurie and Paul. So the
founders of Rand Merchant Bank initially.
If you remember in 2010, we were the advisors to Bafokeng, Royal Bafokeng Holdings, who are now 15% shareholders in the two groups. So South Africa being a small market, we kept in touch, and 3 or 4 months after I resigned from Deutsche, I had a call from GT who said, "Do you have a job yet? I have something small for you to do." And I went to see him and we got chatting. And I think the board at that stage had an interesting concept of wanting to activate the portfolios again. Peter Cooper had done some fantastic work in setting up structurally in the 2 separate companies with the empowerment, with the right structure. But I think the board felt that we had to try and activate the portfolios and see whether we could add to it again.
I see you did an interview with Alec Hogg in May of this year where he said, you know, perhaps you're a glorified asset manager. How does that description sit with you?
Yeah, being an asset manager is not so bad. So I think those are the glory boys of the industry, of the financial service industry. Interesting. I'll come back to the question. We do see asset management, and you would have seen that we've launched an initiative, RMI Investment Managers, to actually invest next to the investment entrepreneurs, investment management entrepreneurs. The interesting thing from a demographics and the war on talent, maybe in the States it's different. There your AAA students would go for coding, you know, that's sort of the new engineering stroke finance industry that's luring the best of the best. In South Africa, I think it's slightly different. Because of regulation, compliance, alignment of interest and site of ownership and economics, we do see that very smart people are joining the hedge fund and asset management industry. And it's one where you don't really need a brand name, you don't really need capital. You may need distribution and some platform, but it is actually very attractive for intellectual capital to be in asset management.
So you talk about this business incubator part of the RMH, RMI story, which is what you said you were going to set about building, and you make reference to it now. Yeah. Where are you? Obviously this is all very new. and you're obviously still setting the pace in terms of what you are going to deliver from an RMH and RMI story. The business incubator side, can you elaborate?
Let me put that in context for you. So the team that we've assembled has 3 jobs. The first one, and it's probably the most important one, is to look after and potentially enhance the existing portfolio. And the reason for that being the most important job, it's really just the velocity. It is a very big portfolio, and small changes there can have a material impact. It's a road that we travel with our CEOs and teams. We don't interfere. We get involved if we're asked to assist, and on certain strategic dialogue. But essentially, the job of the holding company is to pick the best team that we can find out there, and I think we have some spectacular management teams, and they must get on with it. But at the end of the day, we still have to look after our shareholdings in these businesses. So that's task number 1. Task number 2 is to expand the portfolio, call it in a traditional way, by adding a pillar next to the others that will be firstly quite sizable, but more importantly be driven by the right entrepreneur or management team and where we can add value. So that's job 2, is to find a 5th pillar which will by very nature will be sizable. And RMI investment managers fit there. We want to be in asset management. We're underexposed to that industry. So in our parlance, that's a traditional business that we want to put into that space. The third element, or the third task we have, is really to invest in new concepts and ideas. And Laurie always describes it, we need to invest in businesses that can blindside our existing portfolio. Now that's an interesting concept, because when you think of it,
that can blindside your existing portfolio.
Yes.
Just make sure that I am correct in terms of what you were saying.
And when you think about it and you say, but how is that possible? FirstRand is the largest bank now. They span everything to do with banking, and they're expanding even that footprint. And you go through the life and short-term and health insurance industries. You say, well, we're pretty much covered in South Africa, and we have some of the most forward-thinking executives in that team, in those teams.
But you want disruptors to this existing story.
We have to believe the story that it's happened before. It happened when OUTsurance entered the market. The incumbents probably had 80% of the market, the 2 biggest ones, and there was hardly any direct insurance market. And yet today they're a significant player. Similar with Discovery, the 2 biggest health administrators at the time probably had 70% of the market, and today the story is very different. So it happened before, and South Africa is a small example, but there are many other examples, both locally and internationally.
Uber probably being exactly the most well known.
Yes, and so we're saying the change happened 20 years ago. The change or velocity of change has actually improved and increased through technology, regulation, client centricity, collaboration. The speed of change has increased. So we're almost saying the disruptor will have a better shot at being successful, allowing for obviously the big incumbent market positionings and the excellence of management teams, but yet we have to make a stance and take a stance and say some of the smallest ones will come through.
But what about the disruption we're seeing within your own group of portfolios? And here I speak of the Discovery banking idea, which seems as though that course has been set. That's interesting, because you're basically going to have Discovery, I assume, competing ultimately with FNB.
Yeah, that is possible. I think we don't have to go into too much detail in terms of the market segment Discovery would be targeting. But you're right. This is what you find in fintech story, is that banks without branches will try and get into traditional banking. The concept of competition with or throughout or intra portfolio is one we're very comfortable with. It's something that we, firstly, from a compliance point of view, we make very sure that there's never an issue around that. But then I think we want to set up our businesses to compete. You can't
so
take
here MMI with Discovery, for instance.
Yes. I don't think you can take entrepreneurs or intrapreneurs such as a Johan Berger, Adrian Gore, and say this is the track that you must run in. You health, you banking, especially not when you're in a relatively small country. With not, yes, there are opportunities to go outside, but once you establish a brand like Discovery, it's natural to go into the next product line, similar to MMI, going into the short-term line and effectively competing with OUTsurance and FNB now.
Herman, you effectively encourage the competition then?
Yes, on a healthy basis. Throughout the portfolio, we would say we want a preferred nation status. People should acknowledge that there are benefits being part of the same wider grouping. But at the end of the day, it's fierce competition amongst them, and we encourage that, yes.
Having just come back from China, the World Economic Forum in Dalian, the Chinese are very optimistic about the future of China itself. However, as we know, the media, Western players, potentially making more of a big deal of China's slowdown. What are your thoughts?
I had the privilege of visiting China, and if you think of the timeline of their history, they measure some of the dynasties in centuries. It's all about the perspective. Maybe there's been a slowdown, but they're still growing faster than most countries, and that's growth into a big base. But if your perspective is the long term, they're definitely going to be around. In the short term, there may be one or two hiccups, but I don't think you can underestimate it, especially not when you link their ability to be agile and mobilize the economic factors in their economy.
So you think that this is just part of the transition from an investment-led environment to a consumer-led economy?
I think there's still a lot to do with the infrastructure is going to improve and be invested in. If you just think of the masses of people that they want to move around and what that means to consumption. Yes, and maybe it won't be the 7 and 8% that we used to, but they will definitely be a force to be reckoned with.
With your investment banking hat on, you must look also with interest at the emerging market story. So China's one part of that puzzle. A lot of people out there saying emerging markets are now, having been the growth engines post the financial crisis of 2008, are now starting to come under pressure, to dwindle. You've got Brazil that is showing a negative or a contraction in their economy at 1.3% for 2015. Russia coming back 2.7% according to IMF and World Bank forecasts for the 2015 year. What are your thoughts around the broader emerging market story?
So I guess when you talk about those specific markets, you have to also see it in the global liquidity where the money flows are, and those countries in South Africa including have been the beneficiaries of global liquidity. So firstly, you need to think that to the extent that global liquidity may contract again, you could see an outflow from some of those economies. Nothing to do with their fundamental ability to produce, but call it a macroeconomic factor.
Well, it looks as though we are in for tighter financing conditions with the Fed poised to raise by the end of this year. Exactly.
So the moment that happens, then you have the problem that liquidity dries up a bit, and that your most liquid currencies and/or economies get targeted. South Africa being part of it. But on the other hand, you have to remember that emerging markets are such for a reason. They are more risky. They will do better in good times and maybe slightly worse in bad times. Adding to that is the commodity story, to the extent that most of these countries are heavily commodity and resources led.
And you've got oil going from $115 a barrel to below $50 a barrel. It has to have changed the dynamic from an economics perspective.
Yeah, we are in for a tough time, but again, it's your perspective. It's in 10-year view, things should be fine.
Let's bring it home to South Africa. Obviously, the underlying assets for the RMH and RMI story are based fundamentally in this territory. Perhaps barring FNB or First Rand Group, which has exposure to African markets. How do you feel about the health of South Africa itself? Because a lot of your stories are consumer stories.
Yeah. So I guess before I get to the fundamental question, the context is that a business such as Discovery is probably targeted at the middle to higher income market, where we've not really seen a slowdown of any sort to date. Our MMI business, probably through Metropolitan, has some exposure, but if you measure it across the portfolio, we fortunately, or just by fact, exposed to the higher to middle income market.
And do you think that that higher LSM is defensive and will remain defensive no matter how tough things get in South Africa?
I think it's a function of employment. If what we see or being rumored and announced by especially the mining companies, if we see a reduction in employment, there will be pressure on the middle market. There's no doubt about it. But on the low market, we've also heard that the repayments are better than expected. So I think the economy has had a slight respite through the oil reduction oil price, but going forward it could be tough. So I think our portfolios with Discovery, with their partner markets and their UK vitality play, is probably the velocity or the proportion of growth internationally versus local will be quite different. Same with OUTsurance. The Australian UE business now writes more premiums there than the South African business. And MMI is also looking at expanding into Africa and into India. So across the portfolio, we are seeing quite a bit going into the international growth story. South Africa per se, I guess it's again a question of perspective. It looks quite bleak at the moment, but again, if you look through the cycles and you think that you probably have a slight couple of headwinds in education and infrastructure, even into the long term, but in the short term, we still have a prosperous private sector. We have very enterprising people. We have a natural and a national pride and optimism.
So you're not down and out about the South Africa story in general?
No.
Let's get a little more insight into your day-to-day functioning. Take me through a day in the life of Herman Bosman. What happens from the morning through to the afternoon? Just give us a little insight into your day. I mean, what is it? So almost 80 billion on the RMH side and almost 50 billion on the RMI side. That's a lot of money to basically be managing.
We're a small team, so our levels of influence really comes to people, not processes. So we're not trying to get involved in an operational way at all. So most of my days either spent with the investment team. We look at quite a number of investments. Over the last year, we've looked at, in the traditional space, 40, in the private, in the next generation space, 80, and in asset management, almost about 60. So we've looked at a large number of people that we've had one or two conversations with, and obviously that can lead somewhere or not, depending on...
What kind of space are we talking about?
So in the traditional space, we've seen closed life books. We've seen some life insurance businesses. So it's typical what you would expect to have there. In the next generation businesses, we like some of the themes around socialization of funding, peer-to-peer lending, crowdfunding, data analytics. We've seen quite a lot in wealth management, robo-advisors, those type of things. Payment processing, quite a few payment processing, card technology. Those are the themes that we've seen. So the part of my time, or quite a lot of time, is with the investment team and potential investee companies. And then a lot of the time is spent with the CEOs and their teams in our investee companies. Our whole active value-adding involvement starts with a relationship with the CEO. So I tend to speak to...
Has this changed from Peter Cooper's days?
I wouldn't say so. I think Peter was obviously had less resources. He was a one-man show, if I may say so. So I think his focus was much more on the structuring, and he did some very, very smart things over the 2 decades that he was there in positioning the business in the right way. He also had quite a few board appointments, which takes a lot of time. So I think his focus were probably on those two matrices. Mine is more to, as I said, the expansion of the portfolio. But my position, coming from RMB, where I advised Discovery, MMI, FirstRand, gives me a great vantage point and a starting point with the relationship with the CEO. So we spend a lot of time talking
on the ground, so to speak.
On the ground, although I guess it's not.
You're right. It's not actually on the ground. It's in the corner office.
Yeah. So, I mean, we see our involvement as that dialogue piece, that sounding board for CEOs, and not only the CEOs, the top team, because that's where our influence needs to come through. And we focus on capital allocation, strategy, succession, which is obviously a big thing, and really wanting to just have that open discussion with our management teams.
So that makes up the biggest proportion of your day. What about travel? Does that fall into your
yes,
diary?
We see our shareholders in Cape Town, and obviously some of our biggest institutional shareholders are in Cape Town. So there's a bit of that. I wouldn't say more than once or twice in 2 weeks. And then we do look at international assets. So from time to time, especially in the UK, where it's probably the first port of call, we've done quite a bit of traveling there to see whether we can also expand the portfolio geographically.
As you said, you were instrumental in the Royal Bafokeng transaction. What is the relationship with Royal Bafokeng like at this stage?
No, it's great. With them and Remgro, they 30% and 15% shareholders. They have effectively handed their financial services mandate to us. So they do not do financial services outside of RMH and RMI. We speak to them regularly. The investment committee that we have, which meets monthly, have representatives of both those groupings on. So no, it's a very good relationship with them.
So Herman, let's look 5 years out. Where do you see your career going? I mean, is this now for the long term? Are you bedding down within the RMH, RMI stable? Or do you have aspirations to, and it's a difficult, it's a difficult question. So what is the longevity of a position like this?
I think the longevity is great. Obviously I'm here at the behest of my shareholders and my board, but everything being equal, this is a 10 to 15 year career. The fact of the matter is we feel a large amount of pride. We have been handed a fantastic portfolio. The first job is obviously to hand it over to whoever comes after us in a better shape, and that's the challenge, and that's a multi-decade challenge. That's not a short-term solution.
Herman, thank you so much for your time.
Thank you very much.
I've been chatting to Herman Bosman, who is the CEO of RMH and RMI. You're watching Captains of Industry on CNBC Africa DSTV 410.